Here we go. You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries, as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take. Your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We want to chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. Before we get into our intriguing content today, please join me in welcoming our featured guest. I don't know if you've heard this one yet, Lynda.
What's that? Oh, no, I haven't.
Intro music.
Oh, gosh. Thank you.
Welcome back.
Welcome back, Lynda Eisenmann.
Thank you. Glad to be with you, Ron, as always.
Glad to have you with us. And then remind you, if you ever have any home or finance related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan, a plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference, 800-306-1990, 800-306-1990. And yes, of course, we are celebrating today. We celebrate every day on Ron Siegel Radio. National Oregon Day. Do we have a national? Okay, I don't know about that one. Now, here's one that's challenging for me. I will admit, National Proofreading Day. I'm not very good at proofreading. I don't know whether I'm bad at it or I just don't have the patience for it. You a good proofreader?
Same here. Same issue.
Yeah,
nope, not at all.
Thank goodness I can record things and send them to Josh and the team, and they can deal with it from there. That's much better that way. International Women's Day.
Woohoo!
Now we like that one, although, I don't know about International Women's Day because.
Why?
Well, in my household, every day is Women's Day. I have
You're a smart man.
One lady in the house. I mean, and something. I don't know whether it's chivalrous or what the terminology is. Chivalrous or chauvinist? Because I get people tell me both. My wife my boys. I have 3 sons. Proud of all of them. They've been taught you hold the door open for women. You open your mother's car door. Ladies go first. We go to a restaurant and the servers will ask them what they want to eat, and they say, "Well, talk to mom first." I don't know. I'm going to just say I don't care whether it's chivalrous or chauvinist. It's what we're going to do in my household. So I think it's the right thing to do.
It's a smart thing to do.
Yeah, I mean it's to me, we've gotten away from respect in our country in a lot of areas, and I think we need to get it back. So we do that small part. And something I have noticed, thankfully, that my oldest 2 boys, one's married, one's engaged, they both hold the door for their wife or fiance. So bring it down take it right down the list. Now, if you've watched Ron Siegel Radio, ronsiegelradio.tv, or listen to us at any time, you know what I'm going to be looking at today is our other celebration of the day, because having beaten anorexia, I'm always looking for something like this. National Peanut Cluster Day. Milk chocolate, please. I'd like the peanut clusters, although my grandson's allergic to nuts, so I don't know if we'll be having too many peanut clusters in the house right now. So that's just a different story. But hey, let's move on, see what's going on in the world right now. Dow Jones up 112 points. It was down earlier in the day. The S&P 500 is up 456. NASDAQ up 20.31. Oil, it's up $8.39 a barrel, $8.39.
Ow!
Yeah, that's not pleasant. But let's take a look and see. I don't know if it's going to translate through yet, but we'll run through it real quick. Lori, you're getting close to $3.95. Our tremendous underwriter in Louisiana, $3.95 a gallon. She's been the lowest on our team. Jody is one of the newest on our team. $4.29 a gallon right there in Arizona. Josh, you're getting there, buddy. $4.67 in Nevada. $5.44 right here in the formerly Golden State. $5.44 a gallon. I think I paid $5.74 at Costco a couple days ago. I get premium, but $5.74. $4.17 a gallon is the national average. And boy, would I like to be in Hawaii buying gas or doing anything. $4.72 a gallon in Hawaii. So gasoline prices, and I think it's starting to hit now. I like to eat a lot, maybe too much. I've seen the last couple of days I've been at restaurants, and their clientele, there's not as many people in the restaurants as there was for a while. I'm wondering if it's starting to hit. So Sunday night, dinner time, I was at a restaurant, wasn't that busy. Normally it's packed. Yesterday, lunch, restaurant wasn't that busy. Normally it was packed. I'm just wondering if people are starting to realize, something, maybe we better watch things a little bit as gas prices continue to go up. Figure at $5.70 a gallon, $5.50 a gallon. It doesn't take very long till you're at $50 to $75 a gallon or a tank of gasoline.
I paid yesterday driving back from the desert. I stopped at Morongo.
Okay.
And at Morongo, it was $4.96. I expected it to be over $5 because everything else I passed was over $5, but this was $4.96.
Yeah, I was told the other day that agua caliente is usually about $1 to $1.50 a gallon cheaper than the places around it as well. So maybe it's the Indian reservations.
Oh, I'm sure it is.
Right? They have their own rules. So, that might be part of the issue there. So it's moving on. I mean, that's maybe, and I shared I'm not going to go over it again, who benefits from these high gas prices, right? It's not the local gas merchant. He or she does not make extra money because they set a price range for the gas station operator as to what they're allowed to sell the gasoline for. So they're not getting rich on high prices. In fact, they're probably taking a lot more of a beating on it. Who's getting rich on it? Yeah, taxes. Because they're a percentage, 25% tax in California. So, if the state wanted to do something to help the citizens, I don't understand this one. So they tell us, I don't know if we want to believe it or not, that we've got a $23 billion surplus in the state of California. Well, why not do a little bit of a moratorium on gasoline prices or gas taxes right now? Don't you think that would help the average citizen? Now, I'm going to go back to the same thing that I say all the time. Who is the one that is affected most by high gas prices? And I know all of us feel it, but I don't want to sound coy, but I don't think twice about going and filling up my car with gasoline on the same exact schedule that I did. Mm-hmm. I'm blessed, right? I've got a great business going. Thank goodness. I thank every one of you for listening to us and our clients that have a choice. We know on the lending side, we're blessed. But there's people that are working 9 to 5 and making a much smaller salary. And, those are the people that I feel bad for, right? Because they're not that fortunate. They've got a fixed income, right? And if you're making $20 an hour, $25 an hour, you start seeing gas prices double. That's painful. Maybe the state should look at it and maybe they could offer some help. They could do that right now when it would have an immediate effect. Now, I know they're going to have that discussion, I think tomorrow or the day after, about opening up some platforms off the coast of Santa Barbara. Well, we know where that's going to go in California.
For sure.
But right,
For sure.
There's not going to be any help coming there. But the bottom line is, we need to think about these things, folks. You need to call your state and local, your local elected officials. Let them know what you think. Just throwing that out there for you. Hey, also, before we go to break, I do want to remind you, because somebody said congratulations. I don't know who that is. But the bottom line is, go to StreamYard.com/Facebook. StreamYard.com/Facebook. Allow the authorization for us to see who you are. And if you've got questions for us throughout the broadcast, you can put them right there in the chat, and we can chat with you about them if they make sense. Sometimes we get conversations there that I don't understand the language. It's in a a different language, so we don't generally address those. I just have no idea what they are. But we got a lot to cover with you. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, how global uncertainty is impacting mortgage rates. We'll talk about it. 9 factors that have no influence on your FICO score. Is it a good time to buy or sell real estate? How do you get planned for that right now? I know we're in challenging times, but we're going to give you some education right there as well. You can reach me anytime. Our off-air number, it's 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, shame on you. But the replay is available. Ron Siegel 1 on YouTube. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. Dow Jones now up 235 points. NASDAQ is up 97 points. The S&P 500 is up 23.79 as I speak to you right now. We're looking at the 10-year Treasury. It's coming up 10 basis points. Mortgage-backed securities, 34 basis points down, meaning interest rates are going up again. Why is all of that happening? Well, it's a lot of it's got to do with, we got a couple of issues. So the president came out just a few minutes ago and said no more Russian oil. I don't know whether that was his idea or just basically it's happening anyway. Shell said they're closing down all of their operations in Russia. The tankers are not bringing oil out of Russia. The SWIFT market, they're still accepting Russia's money for energy. But if you've got the transportation companies won't move it, you got a bit of a problem there. But what else is going on? Commodities. Nickel up 64% yesterday. Gold up to 2019. Copper's at an all-time high. The February National Foundation for Small Business Optimism Index showed businesses got less optimistic, falling from 97.1 to 95.7. Small business owners are reporting that inflation is the biggest problem. As a result, companies that expect higher selling prices rose to a fresh record high, going back to 1974, rising by 7 points to 68%. Remember that this report was for February. So these numbers are going to get worse. We've got a 10-year Treasury auction tomorrow. We'll see what happens with that. And we've got inflation numbers coming out on Thursday. So those are all numbers that you need to be aware of. And I'm going to see if I can get this data. And I want to, because that, and I'll just tell you, that's the Mortgage Minute brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. I'm going to share this with you. Hopefully I can share this with you. And then we're going to talk with Lynda Eisenmann about this, because it's something that most people don't understand, and it's no fault of anyone's own other than the fact that why would you know about this? Why would you know? We know about what we're focused on, what our world is. But here's the issue. We are on way for a recession. No question about that. There's a recession on the horizon. Government spending, that we know is going to cause part of the recession, because we knew that we had certain numbers that were going on, and as far as the money that the government was putting out, and we had different numbers that the government's not going to spend that $5 trillion. But here's the issue, and here's what I'm going to share with you. And I remember a lot of these. I don't go back as far as all of these different recessions that I'm going to tell you about. But here's what I want you to see. And I'm going to try and get this. I'm having trouble getting it on my screen here. Going back to 1960. So there was a recession in 1960. Real estate dropped just a little bit. There was a recession in 1970. Real estate went up. 1975, real estate went up. 1980, real estate went up. About 1982, real estate went up. 1990, real estate went up. 2000, real estate went up. These are all recessions. Real estate went up. In 2020, real estate went up. So these are all recessions that are caused by something outside the norm. We don't, I'm not going to go into why every one of them was caused. We do know the only time real estate took a big drop was in 2008. Well, the recession was caused by real estate. The other recessions were not caused by real estate. So the big issue there is you need to just watch that. Lynda, you go back and you remember
I do.
Many of those.
I do. Well, several of them.
Several of them.
Yeah, not back to 1920 or anything like that.
Right.
But yeah, several of them. Yes, I do. And we lived through them. We worked through them.
But right now I think the big challenge is up until 2008, people remembered they experienced recessions, and you live with it, but real estate was a hedge. Our young people, the millennials, they only remember one recession. And real estate took a big dive.
Yeah, it was kind of a drop-off point at that point in time. Yes.
So are you seeing young people that are afraid of buying now that we're heading toward a recession?
I don't think so. I still see the demand being very, very strong.
Okay. And you're in, well, now I can't say it anymore. It used to be that we used to talk about you being in North Orange County, but now.
Well, I still am North Orange County. But I share my time in the Coachella Valley.
And that's a great place to be.
It is. It is.
Although this year it's been weird out there.
Why is that?
I don't know. The last time I was there, it was pretty chilly. And usually you can go out there and it's, the summer it's unbearable, and the winter it's nice.
Well, we've had a few days that have had a cooler weather. Yeah, just a few days here and there, but not all that many.
Oh, really? It hasn't been bad?
No, there's just a couple of days that you put on a sweatshirt or something like that. And that's as bad as it gets if you really think about it.
Yeah, that's true. Still a great place to be.
It is, undoubtedly.
So, what we did is we put up some numbers here for Brea.
Okay, thank you.
And I know that's your world there.
My backyard.
Number of listings right now, according to the stats we have from Home Scout, 43 active listings. What is, in your history, what is a normal, give or take?
I don't think there's 43 active listings in Brea right now. I'm gonna really challenge that. I think there's fewer than a dozen active listings.
It's less than a dozen.
Less than a dozen.
And
2 weeks ago, they were like 4 and 5 at a time, and that was it.
So,
and by the way, if I can add that some of those they were active listings, but they were listings that had multiple offers growing on them at that period of time. So maybe 4 or 5 days later, the agent would present offers, and he might have a half a dozen to maybe a dozen offers on a particular property. So just because it says active, it doesn't always mean it's available for anybody out there at that asking price.
Which that ties into what we also see here. Median list price was $880,000, and the median sold price is $909,000.
Yeah.
So
at least that difference.
So average days on the market is 39. Median price per square foot, 477. Recent sales, 86.
Yeah.
So in a more normal market, maybe 2019 or before.
Okay.
In Brea, what's a normal, just a guess, approximation of the houses that would be available for sale?
Around 20.
Around 20 normally.
Around 20. Yeah, give or take a few.
Okay, so
if you're talking about single family residences, yeah, probably about 20 at a time.
About 20. Okay, yeah. So Brea is always a small number of properties available.
Well, it is. It's a small population when you compare it to other neighboring cities. That has something to do with it also.
Yeah, that's you don't think about that when you're in Orange County.
No.
that a city's going to have such a small population. I looked that up, and you can look up this as well. rsrhomescout.com, rsrhomescout.com. They claim that Brea has 43,255 people as their population.
That's what the city also has on their website.
Okay.
Yeah.
So maybe that's where our friends at Home Scout get their data. But that's just fascinates me.
That is
Little
such a small
city.
community. Well, it has been all along, and we've always had a larger daytime population than we've had a resident population, meaning more people worked in the city of Brea than lived in the city of Brea.
Well, that's interesting.
Well, and it's changed a little bit because some of the places that were resources for businesses are becoming more residential than they were.
Yeah, I know they used to have, I don't know if it's still there, that it used to have that big Unical plant back there.
Oh yeah, that's been gone for a long time.
Okay, I date myself.
I hate to say that, but it has.
Shows how long I have.
And of course, there's homes there now.
Oh, okay.
So
So it's exactly what you're saying, is that the businesses are moving out and people are moving in, which is a great community. I mean, it's
it is.
You get a lot of that small feel.
There's a very sense of small town community there in many ways.
And just to put that in perspective, I think the last time I looked, Anaheim has 330,000 people.
Not surprising.
Right. So Brea is about 12% of what Anaheim's number is. So it's a nice place. So are people able to still find a property? I mean, it's hard to find something. So what's going to be the real estate impetus there? Are people, well, like yourself, where you kept your property, you kept your home in Brea.
That's correct.
And now you're out in the Coachella Valley.
I am, but I have to tell you, many of the people that live on my street, and I bought in Brea in the 70s, many of the original homeowners are still there. It's surprising we have such long-term homeowners even on my particular block.
So at some point in time, and I know that we had this on our block for a long time, nobody ever moved.
They didn't.
And then when one person moves, it kind of like opens a floodgate.
Yeah, you're right.
I mean, it fascinates me how that ends up happening.
There is that to a degree. And you have to think about how the population ages. Because when most of us moved in the neighborhood 40 years ago, or whatever period of time it was, because there was a tremendous amount of building that went on in Brea in the late 70s and the early 80s, and even the late 80s also. So we've had a lot of new construction at that time. So you look at the average age of the person that moved in that home, and those that are selling now are not the young families. The young families are staying. It's the older people who are ready to retire, move out of the state, maybe go to Arizona or something like that.
They're getting ready to right size.
Yeah, that's right. That's a good way to put it.
Right. I mean, because basically what ends up happening is what I watch is, especially now, we're promoting people all the time. When I first bought my house, my parents just got upset with me. Not that I bought a house, but I bought a 2-bedroom condo.
Oh, okay.
And this is in the early 80s.
Okay.
And they, obviously it was 18% interest, 15%, something like that. But, it was, why would anybody buy a 2-bedroom house? It was a starter home. Now I promote, buy a 1-bedroom, buy a 2-bedroom. It doesn't matter what it is.
Because that's what it takes.
Right. To get started, get in the market, get in the game,
Absolutely.
And move up, then right size. We're going to talk more with Lynda Eisenmann when we come back. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets, how global uncertainty is impacting mortgage rates, factors that have no influence on your FICO score, and more. You can reach me anytime. Off-air number 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio. or anytime at 800-306-1990, 800-306-1990. The Real-Time Real Estate segment is brought to you by the area-trusted real estate professionals of Ron Siegel Radio. Visit rsrhomedigest.com, rsrhomedigest.com. See exactly what the county recorder knows about your property, what the market believes about your property. Once a month email from your friends at Ron Siegel Radio, and it's totally free. Or if you're thinking about what your property is worth, you can also go to our other newest source, rsrhomescout.com, rsrhomescout.com. How global uncertainty is impacting mortgage rates. If you're thinking about buying or selling a home, you'll want to keep a pulse on what's happening with mortgage rates. It's not pretty right now. Rates have been climbing in recent months, especially since January of this year. And just a few weeks ago, the 30-year fixed mortgage rate from Freddie Mac approached 4% for the first time since May of 2019. But that climb has dropped slightly over the past few weeks. So let's take a look at that. And I'm going to, sometimes you get some of these reports, and especially from Freddie Mac, and they're always a little bit behind. But we're going to show this to you, and then I'm going to show you another chart as well. The recent decline in mortgage rates is primarily due to growing uncertainty around geopolitical tensions surrounding Russia and Ukraine, but experts say it's to be expected. Here's a look at how industry leaders are explaining the impact global uncertainty has on mortgage rates. Right? Remember, I told you a little earlier, they're up today. Odetta Cushy, Deputy Chief Economist at First American, says, quote, while mortgage rates trended upward in 2022, one unintended side effect of global uncertainty is that it often results in downward pressure on mortgage rates. In another interview, Cushy adds, quote, geopolitical events play an important role in impacting the long end of the yield curve and mortgage rates. For example, in the weeks following the Brexit vote in 2016, the U.S. Treasury bond yield declined and led to a corresponding decline in mortgage rates, unquote. Cushy's insights are a reminder that historically, economic uncertainty can impact the 10-year Treasury yield, which has a long-standing relationship with mortgage rates and is often considered a leading indicator of where rates are headed. Basically, events overseas can have an impact on mortgage rates here, and that's what we're seeing. Will mortgage rates stay down? No. While no one has a crystal ball to predict exactly what will happen with rates in the future, experts agree that this slight decline is temporary. Sam Cotter, Chief Economist at Freddie Mac, echoes Cushy's sentiments, but adds that the decline in rates will not last. Geopolitical tensions caused U.S. Treasury yields to recede, and that was the week that they did this, that they got this quote, leading to a drop in mortgage rates while inflationary pressures remain. The cascading impacts of the war in Ukraine have created market uncertainty. Consequently, rates are expected to stay low in the short term, but will likely increase in the coming months. Rates will likely fluctuate in the short term based on what's happening globally. But before long, experts project rates will renew their climb. Bottom line, we're not seeing what is a normal market right now. Normally, that is exactly what we would expect to see. But because of the rates of inflation that we're seeing right here in the U.S., markets are not operating the way they normally would operate. And I shared with my team yesterday a new component that we have on rsrloans.com, and it actually shows what rates are being locked at on a daily basis. Now, Freddie Mac does their survey. I've told you this before. Freddie Mac's survey is they do it Monday through Wednesday. They report it on Thursday. So it's already outdated. The best I could get you was data from yesterday. Sorry, I don't have today's data yet. Day's not over. So as of yesterday, Ellie Mae, who is the largest loan origination software in the country, they've got a 35% market share. Loans were locked yesterday at 4.1% on a 30-year conforming rate loan. 4.1%. The day before, it was 4.04. The day before that, it was 4.125. Prior to that, 4.085. And when the report that I just gave you was written, 3.96. Now, it's gone from 3.96 on March 1st to 4.1 yesterday. So can't give you anything more current than that. And I forecast that they're going to continue going up because of inflation. And we're going to see the Federal Reserve wants to increase rates. So we'll see what happens. I don't think they're going to go with the half point that they said on the 16th, but they want to raise the rates. They should have been doing this a while ago. But that is the real-time real estate segment brought to you by the area trusted real estate professionals of Ron Siegel Radio. Visit rsrhomedigest.com, rsrhomedigest.com, or rsrhomescout.com. So you've seen a lot of these times where we've seen these geopolitical events,
Yes.
right? I mean,
Yes.
I've got a couple days in the market. I only go back to the 80s. I know you go further than I
A
do.
little further, yes.
And the market, the markets go up, they go down. We see all of those things. But geopolitical events, usually they don't understand that people are flooding the market and buying U.S. treasuries, right? That's the key. That's why we see that the bond price goes down, but the yield goes up.
Mhm.
And right now we can expect the same thing to happen. There's until the day that there's a ceasefire, a legitimate ceasefire, right? Then we'll see that the money will flow back out. We still have to deal with inflation, though. Have you ever seen where inflation and geopolitical events have collided like this?
Not that I can think of.
I can't think of that
Yeah,
collision.
Yeah. Mm-mm.
And there's that big
Mm-mm.
battle, and the Federal Reserve,
Mm-mm.
they already shot all their arrows, right? I mean, so they can't be the one to step in. They're actually doing exact opposite. We did see the Federal Reserve do this back in the early 80s, right?
I remember the difficult times of the early 80s and where we were at interest rates. And I had one buyer, believe it or not, that we were ready to close. And I felt like I had to apologize because of the interest rate that they were paying. And these people bought in my neighborhood. They bought on my street, about 6 houses up and across the street. And I was so apologetic at their interest rate at the time. Just take a guess at what it was.
What year?
Early 80s.
18.
You're 17 and a half. You're right
Wow.
on. You are right spot. Could have been 18. You're spot on. And this is what he said to me. He said, Lynda, you're spot on, Ron. Said, don't worry about it. It's 24% in our country.
Wow.
Wherever he moved from.
Right. That's fascinating. And
Shocking.
I've got a chart here of interest rates going all the way back to June of 1971. And you look at it, and 18.44 was October 1981.
Okay. It goes, I'm sorry, you said it went back to 81?
No, it goes all the way back to May of 1971.
What was it in May of 71?
7.46.
Okay.
Now it did go up to 10.03 in September of 74.
Okay. My husband and I take that back. I was going to say we bought our first house then. No, but 1971 is when I started in real estate.
Okay.
Way back then.
So in 74, what would have been the impetus for rates to go up? That would have been the Nixon crisis.
It was.
Right. So October of 74, 9.94.
Mm-hmm.
And have you heard anybody lately say that, rates are at 4.25 and I'm waiting for them to go down?
No, I've not.
You haven't
Not
heard
at
that
four,
one?
not at 4.25. No.
Okay.
No.
Because I've heard that recently
What?
where people are, especially young people, that, they only know of the 2010 to 2020. So they're looking at it and they're saying, I'm waiting for rates to go back down again.
There are people that have no idea that we ever had double-digit interest rates.
Right.
No idea at all.
So, let's go back to that time then, Lynda.
But
Did people want to buy a house at that point? Were they willing? Did they have the vision to say, something? Even though rates are higher than I think they might be, I still want to buy a house.
I think most of them did, because look at the difference in price of housing. It's all about housing prices when back at that time. So, and look at where we are today with housing prices and what's the average median price in any particular area versus where it was 10 or 20 years ago, even when we had higher interest rates.
That's a great point, because
Well, it
the interest rate being is half of what it was back then, and the price the interest rate has more impact on what you're going to actually pay on a monthly basis.
Correct.
Than the price of the property. So the prices can keep going up, even though the interest rates are where they are. Or they've
And I think that's what's been happening, don't you?
absolutely.
Yeah.
So there's an interesting conversation in the office where I do my radio show.
Okay.
And one of the people bought their house in 1984, paid $102,000, 12% interest.
I believe it.
So his payment was $1,054 a month because of 12% interest.
Mhm, mhm.
Now, one of the younger people in the office paid $432,000, and I don't have the year that she did that, but she was at $1,700 a month. And then recently, one of the folks, 2017, $680,000, $3,300 a month. Now that property is going to be, that's about where we are right now in interest rates, 4.25%. So,
but you're going to have a lot higher payment than $3,300 a month because of where we are with prices today.
exactly.
Without a doubt.
Yeah, Orange County, the last time I looked was about $950 was median home price. Was Orange County, California.
Probably.
So, but it's still, now I did see a report recently, and you'll be able to tell me if you're seeing that. My report is national. Much more than I do local. 22% rise in rent rates.
I'm not surprised. I don't know that exact number, but I am astounded at what people are paying for rents today. I see it in my own community. I see it in single family houses. I see it in condos, and I see it especially now in upscale apartments. People are paying $4,500 a month to rent an upscale apartment.
So let me ask you this question. I'm going to put you on the spot, Lynda.
Try it. Go ahead.
Okay.
You have before, so go ahead.
Well, yeah, but you've got enough experience. I'm not asking you anything that I bet a million people have said before.
What's that?
So Orange County, California, we've got a median home price of $950,000. That means, give or take, we're around $1,000 to $1,200 a month, just in property taxes. And you compare that with a $3,000 or $4,000 a month rent. The property taxes are things that's basically lost. I'm not going to ever get that back. Does that filter into that at all?
Well, you're not going to get it back, so to speak. But first of all, you get the deduction,
okay,
on your taxes, and you have to look at the overall picture. And the overall picture is, where is rent getting you in your future? It's not really getting you anywhere. Home ownership is.
Big point right there.
Doesn't that make
absolutely
sense?
Huge. That's a huge point right
that's
there.
That's the bottom line.
Because when you think about it, if you're buying a house with 20% down and it's growing at five, well, right now it's growing at 10%, but historically it's about 5% in Orange County.
Yeah, 5 to 7 maybe.
So you put 20% down, your leverage means that you take that just around 5% is your appreciation is 25% on your invested dollar. Where are you going to get that kind of money?
Not anywhere I know of.
I don't know it either, other than in oil the last month or two.
I was going to say anywhere where it would be safe, considered safe.
That's exactly
That's
it.
really what it comes down
That's
to.
the big issue. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. More with Lynda Eisenmann when we come back. Buyers' expectations in home buying. What would you expect right now? We're going to talk about that. 9 factors that have no influence on your FICO score and more. You can reach me anytime. Off-air number 800-306-1990. 800-306-1990 or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few minutes.
Ron Siegel Radio, your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Your Credit Matters segment today being brought to you by creditsanitizer.com. You have a credit report. It is wrong. What are you doing about it? Credit Sanitizer, they've got the solutions for you. 9 factors that have no influence on your FICO scores, or maybe just a very minimal influence. Having a good FICO score can benefit you in many ways. Good credit has the potential to help you qualify for financing and to receive offers for better interest rates and borrower terms too. If you don't want the offers, just a clue for you from your friends at Ron Siegel Radio. optoutprescreen.com. Optoutprescreen.com. I recommend every person that we talk to, and that would be you, go to optoutprescreen.com, register there, and you won't get what they call trigger leads. So you're not going to get the information that's coming where your house is being, where you're going to get all those credit card offers and all that other garbage that you don't want. Optoutprescreen.com. So what factors into your FICO score? Well, we've talked to you about the percentages of what counts in your score. Here's items that don't count. Personal information. Your name does not count into your FICO score. Date of birth, social security number. Those don't go into your score. They tell you that your address doesn't, but I've noticed when my address changes that it does. And I've told you before, here's how I know. Because they don't tell you what the exact algorithm is. I pay for a service called myfico.com. Myfico.com. Only place you're going to get the exact FICO scores because it is FICO. Myfico.com. I noticed that I have one credit card that always puts my address down wrong. I correct it all the time. As soon as they change my address, my score drops. I get a notice on my phone every time there's a change on my FICO score or on my report. So every time a credit card reports, they tell me. Every time it changes, there's all of these things.
Ron, can I ask you,
Yeah.
what is the change? Is it a couple of points?
I'll see anywhere from 3 to 9.
Oh, as high as 9.
3 to 9.
Wow, that's a lot.
What they're looking at is stability. So if you're changing your address a lot, I believe that that's where it's coming from. Your age does not count into your FICO score. They don't know what your income is. They have an idea based on demographic research and artificial intelligence. If you live in XYZ zip code and you've got a job that is, whatever, they can kind of infer, but income doesn't go into it. Employment history. They better not be grading you based on religion, national origin, race, color, sex, marital status, and receipt of public assistance. Those things are not allowed to do under federal law. Prepaid debit cards. A lot of them don't report. Now, if you need them, they report. You can go to the right ones. We can tell you where. Sometimes we do that. Credit denials. They don't know about credit denials. They do see the inquiry. Credit counseling doesn't go into it. Non-predictive information does not go into it. Bottom line, you got to watch your scores. Like I've said, I've been paying for myfico.com. In fact, the plan that I have on myfico.com is not even offered anymore because I have a family plan. So I can watch mine and my wife's all the time. Like I said, we get a notification every time there's a change on the scores. That's the Your Credit Matters segment brought to you by creditsanitizer.com. Again, go to optoutprescreen.com unless you like lots of junk mail. If you're bored and want to have something to read at the end of the day, you can go to Don't Do This. You'll get all the junk mail, but a lot of it will cut down.
Can I ask you a question? Another question. If you go to optoutprescreen.com, does it, if you have more than one address, or are there different ways that you can opt out of different versions of it? Does that make sense?
Yeah. So basically, it's going to be a combination of your address and your social security number.
Okay.
Is what's going to tell you that the way they're going to monitor it, because you're generally your report is driven by your name, your social, your address, your date of birth. So they're going to have enough information because so many people have. I mean, I have a goofy one. So
what do you mean a goofy one?
So my middle name is Ivan.
Okay.
So one of the credit card companies has me down as Siegel Ronald Ivan. Right.
Okay.
So what ended up happening is it got truncated somewhere. So then another one calls me Ronald Siegel the Fourth because of the IV. So it's something I have to correct my name on a lot of them over and over again because they don't fix it.
How does that impact your score?
So sometimes it will impact it because they're saying there's no stability.
Oh. Okay,
so I can always and I can just see it happen right on there all the time. So it's fascinating how you just want to always be watching that.
Right.
Yes, a Facebook user says that there's free FICO app daily notification. Probably not a FICO app. It's probably a credit score app. Big difference. That's a FICO app. So if there is a free FICO app, I'd love to know about it. I have not seen a free FICO app. I've seen the free FICO apps, Credit Sesame, Credit Karma. Those are all FICOs. They fake you out into thinking that that's a FICO score, and it's not. So let's get back to our conversation with Lynda Eisenmann, Preferred Home Brokers. We're chatting about real estate. Lynda's one of my favorite guests to come in because we don't plan anything.
We don't. You're right.
And we go down rabbit trails, and I'm never going to stump Lynda on real estate.
my
I
gosh.
just
You did earlier today.
it's the fun of us being able to chat back
Mhm.
and forth and share great information.
Mhm.
Are buyers' expectations realistic right now?
I think it depends upon where they start.
Okay.
If they're new to the process, not necessarily. If they've been around looking for a little while, then yes, they have a far better understanding of the overall market. They understand what it's going to take for the most part in order to get an offer accepted, because they probably submitted multiple offers and haven't gotten any of them accepted.
Is there any stat out there that tells us that you've seen from any of your resources? How many offers are people having to make to get, and how long are they searching for a home? We know how many days a house is on the market.
We have been told, and this is just recently at an open house 2 weeks ago, one person said they had been looking consistently for 2 years, and they sold the worst part about it is they sold their home 2 years ago.
Oh,
And they've been renting all this time. And they were just
Ugh.
moving from one city to the other, North Orange County, one right next door to the other. But when I heard from the other agent who had the open house for me, he said, Lynda, these people sold their house 2 years ago and they've been looking since then. And they're one of the offers that we had on that particular home. Their offer, unfortunately, did not make it. I think they were number 2 or number 3 or something
Wow.
like that. And they went way over asking. It still didn't make it. But you imagine the amount of money they lost in the past 2 years in the market because they
30%.
were renting. Oh gosh. When I heard that, it was heartbreaking.
Yeah, and I have one of our private clients did a cash out refi. We talk to people a lot of times about
Mhm.
doing cash out
Mhm.
refis,
Mhm.
liberate some of your cash,
Mhm.
and buy another piece of property.
I think more and more people are doing that. Don't you?
Yeah, absolutely.
Yeah.
So this family did this. They're down in San Diego. They took a lot of cash out. Started the early part of last year shopping,
Okay.
and this is high net worth.
At what point did they start making offers?
Probably in March of last year.
Okay. March of last year. Okay.
Started out offering on homes in the 2 million price range with a sizable down payment.
Mhm.
Went to 2.5, still was beat out. Found a home at $2.8 million, bid up to 3.5 million,
Ooh,
and still lost.
lost.
Finally just got back into contract. Now it's over a year of shopping at a 7-figure price point. And I'm just wondering if now I know that in this case, we have the right expectations set. How many people are getting that guidance? Right? They're going online and looking at houses and say, oh, I want this one. And find out that, yeah, you might not be able to get it without good guidance.
Well, obviously, the people in our case, that the folks that came through the open house that I was telling you about last weekend, or the weekend before last, I guess, they had sold 2 years ago, not realizing what the impact would be by waiting, not necessarily waiting, but taking 2 years almost to get an offer accepted. And they still didn't get their offer
That's
accepted.
painful.
And they went substantially over. It was heartbreaking to tell that particular agent, quite frankly, that their offer was not accepted because we had a higher offer.
That's now.
And by the way, the higher offer was also an all cash offer.
All cash.
Verified funds.
So there's a big issue. So you want to make sure that if you've been having trouble getting an offer accepted, and I think it's going to get harder as we get closer to the summer when more people are wanting to move. You know, kids are getting out of school and whatnot. Get pre-underwritten.
Absolutely.
Go the next step.
That's one of the expectations today. You're not going to get an offer accepted without having some kind of full pre-written approval. You're just not.
Now you're going to know more about this part than I do from the latest change that I was told in the residential purchase agreement for California.
Mhm.
Actually has a box on there to say pre-underwritten.
Correct.
Right. That's brand new because it wasn't something that was done for a longest
correct.
time.
It wasn't commonplace.
Right.
It just didn't happen. When you would write up an offer, you'd write it up subject to the buyer obtaining or qualifying and obtaining a loan. Well, that's not the case anymore.
Sure. So we've actually come up with a program for you, and I don't even know if we have it all built out yet, Josh. I'm going to throw this at you and see a way for you to get your offer accepted by going well over the price, the asking price, and keeping your payment the same. How about that one? So, Lynda, you probably saw this years ago. we used to do something called a seller buy down,
Yes.
where the seller would help
Yes.
with the interest rate,
Yes. Forgot about that.
right?
Wow. That's
So-
a flashback.
Yeah, it is, right? So now let me ask you this: on that particular property, do you think the sellers would have entertained? And I'm just going to throw out numbers. I don't care what they really are. So let's say that the winning offer went at 900,000. If the buyer came in at $1 million and said, "But we need $30,000 from that extra 100,000 to help with lowering our interest rate," do you think they would have taken the sellers would have been interested in an extra $70,000?
In this case, no, because we got an offer that was that much higher and it was all cash. In some cases, it could work.
So
It may or may not.
the bottom line is you need it in your quiver, right? You need to have that as part of your arsenal.
Yeah.
And experienced real estate professionals understand this.
It just depends upon what else is on the table at the time.
Right. Going against the cash offer, that's a tough one.
A cash offer, and the fact that one of the other aspects today when you're making an offer, have an understanding, number one, just not vague, but have a pretty good understanding of maybe the condition of the house. Therefore, if you're going to have the contingencies built in, you want to have shorter periods of those contingencies. You're not going to expect a seller to wait 10 days to get an inspection done to see whether or not you're going to improve it.
Interesting. So you got to do your due diligence. And again, that's when you're going to have to count on your professional realtor to help you out, because they've got a lot more experience than you or I do, because they're into a lot of properties.
If you're going to have a housing inspection, you better know ahead of time who your inspector is. You better have a good idea of what their schedule is. In other words, if you get an offer accepted, can you get the inspector out there within 3 to 5 days? Maybe, maybe not. But I tell you, a seller's not going to wait 10 to 14 days to get an inspector out there. And
I'm seeing that as well. Yeah. Get rid of those contingencies as quick as you can.
minimize them.
Minimize them.
Get rid of the ones you can, and the ones you can't, minimize.
There you go. As always, great information from Lynda Eisenmann. If you want more information from Lynda or to meet Lynda, give me a call, 800-306-1990, 800-306-1990, North Orange County and the eastern part of the Coachella Valley.
That is correct.
Eastern part of the Coachella Valley. Hey, Stagecoach, Coachella,
You bet.
the tennis tournament, golf tournament,
We love them all.
out there with Lynda. And as always, I ask you, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh and Sean, who are engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.